Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, we're going to discuss buying the dip. When is it a good time for day traders to buy the dip? You're going to want to watch this video. So before we talk about buying the dip in day trading, you're going to hear the debate of buying the dip or cost averaging in. And those terminologies are more for long-term fundamental analysis type trades. So with buying the dip for a fundamental trade, meaning maybe a blue chip stock or a stock that has a moat or something that you've done research on and you feel extremely confident, there's certain conditions. So the first condition for buying the dip, not on a day trade, on a stock that you believe in long-term, is that you truly have to understand the company and stand behind the stock you own. So you've researched, you've done your research on that stock, you believe in it, and it fell 10%. Now that shouldn't scare you away. That should excite you to want to buy more of the stock. So that's the first condition. The second condition is that it's a sound company and there's some sort of price decline. So it's a buying opportunity. And if we look at, for example, in 2018, Apple, so when they had a few quarters of disappointing iPhone sales, their stock price plummeted. And a lot of smart investors, long-term investors, or investors that are bullish on that stock looked at it as a discount because the short-term or short-sighted traders got out early, took their money, or were worried. And a lot of the long-term investors jumped in and got that stock at a discount, and it's now trading at 160. So that's a little bit different than day trading. Day trading, we just want to buy the dip because there was an overreaction. There was some sort of fear, something going on, and you just want to buy it at support and see it reverse. So with buying the dip, again, there has to be some sort of volume, extra volume going on. There's more attention. So if we see here, this blue line is kind of like the average volume, and you see there's more than above average volume. So that's the first thing. So here the stock went to 184 and it bounced to 163. That's a major drop. 184, 163. So the first thing you see, I have already reversal points. So that's the first thing you have to learn. You have to learn where to draw your reversal points. So like here, for example, this was the low of yesterday. That's a support to me because it dropped yesterday at that price. And then some of these lines, they kind of go back far and far, and they're just areas where the stock has dropped and it's done reversals. So that's the first thing. Support and resistance is extremely important when you're buying the dip. Trend is something else. Trend, it's on an uptrend, right? And you see it uptrending. So it's going to be hitting here and dropping here, hitting here and dropping here, kind of like in this channel. This is an uptrend. But support and resistance, it's dropped here, and then, it's had trouble breaking this wall in the past. See here, like in the morning, it went exactly to here, 184, and this was an area in the past where it hit and it didn't break it. So it hit that 184, then dropped to 163. So a couple strategies, if you wanted to, you could have jumped in here, but that's high risk. You may want to see kind of like an uptrend a little bit and then back down. When it goes down though, you want to see higher low. So this is the low here and this low is higher. That would be a better entry because you waited for the higher low, which would be right here, 164.36. And now you have a defined exit strategy. I would get out at the low of this candle. If this broke, then who knows where it's going to go. It can possibly go down to here or down to this trend here. So that's the problem when you get in on the first bounce off of a previous support. If it doesn't hold, then it can just be a quick free fall here, as opposed to if you wait, and you may miss it sometimes. You may see, it just uptrends right away. But in this case here, it pulled back a little and it made a higher low. So now if you got in here, 164, you know where your exit strategy is. And taking partial profit would probably be smart here, 184, because this is where it had trouble in the past. So taking profit, some profit there, and then holding the rest. If it pulls back, then get out, you're still green. And if it goes up like it did here, just hold on until it totally starts to reverse. Good strategies for buying the dip in day trading. I like fast drops. I like stocks that just drop quickly and then they're falling into some sort of support. I like that it has to have some volume, like in the morning. So falling into support, fast drop, high volume. And I like also when a stock is on an uptrend. So here we had dropped, went up, went back down, made a higher low. It seems like it's going in an uptrend. So this would be a better entry. Another thing with buying the dip, I like to also buy into patterns. So I'm going to show you a couple of my favorite patterns. I like the ABCD pattern, and we're going to show an actual video of a trade I did using the ABCD pattern. I recorded the video, I recorded the trade, and I kind of like did a live trade and commentated while I was trading. So this is a stock I was in. You see here, I have 1,500 shares at $3.95. Okay, so this right here, this first spike all the way up here, there's a small wick right here. That's why I have this resistance here, 438. This is the A. Okay, so I missed this spike, but then it bounced back here and it hit a low of 366, kind of consolidated, hit the low of 366 again. So on this one, this catches my attention, right? So this would be the A. This second low would be the B, and then it makes a higher low. So this area here would be the C. So you have here the A is the spike up here. It bounced. It didn't make higher lows here because it bounced here. Okay. And then here it made a higher low. So this is the B. This area here is the C because it's starting to make higher lows. If you see here, this stock, the low is right here. This is the low, it's higher. This is the low, it's higher. This is the low, it's higher. This is the whole low, it's higher. So the lows keep on getting higher. And then D would be the previous high of A. Now, usually this stock, it breaks D and it goes up a little bit, but not too much. And I like to take profit at D, mostly probably like 70% profit. And then that's it. And then if it keeps going, just hold on to the rest. So I think in this video, while I'm talking, I start to put the letters on the pattern itself. Let's see. Yeah, so see, I start putting here, I'm saying A, and this is like real live time. This is different than showing you a still chart. I actually recorded this video and while I was trading. You see here, this is real live ticker action. You see here B, C, D. It broke D. Now, when it breaks D, you want to see it break, and then you want to see this previous resistance become support. That would be a more bullish sign. That's why I take partial profit, and then I just hold on. See here, it breaks. Next candle, you want to see it bounce off this orange line and not kind of like right now, it's still having trouble breaking it. See here, now it broke it, and it's bouncing off of it. So you're going to see a little spike. See here, it's bouncing off of the that resistance line. So you see here in this one, that's why we take profit at D, because sometimes it bounces and it goes a little bit more spike, and sometimes it just crashes afterwards. So I have another example of the ABCD pattern. So it came out on the news scanner, spiked up here, A, tapped this down here, started to make a higher low, higher low. Okay, so here A, tapped here, B, higher low, C, little pullback, and you're going to see a break. You see here, same formation. So this is where we try to buy. We try to buy B when we're confirmed here. Like we'll see here, it dropped down here, made a higher low here. So this is probably, the best entry here. You see that? That's where I'm pointing at in the video. And I think this one does break it. So right here, we take partial profit, and then we wait to see if this is going to become support and if it is going to go a little bit more. See here, it's going to go a little bit more. And when it was a great trade, and then it comes crashing down. So that's another way to buy the dip, is on a pattern. And here we have one more example we're going to use. So we have here the spike. This time I used the Fibonacci retracement. You see here, retraced down to this area, but it's similar to ABC pattern. You have here A, tapped here, started to make a higher low. And you see here, these are all the stocks that I bought. Bought 300 shares at 12.25, at 12, 12.10, 11.86, 11.75. And this is the real-time profit. Let's see here. So we see here, A drops down here, makes a higher low. See, this is the lowest, then it makes a little higher low, higher low, higher low, all the way up. And this is the previous high, 1488. And that's why I sold partial, but I held some because I was waiting for that D to get taken out, the top part. And I think this one never made it up there. But if you see here, $564.90, basically I'm buying this dip and having confidence that it was going to go back up. And this is a matter of, you see here the time, 4:20, and sold my last shares at 7. So 2 hours, $564, quick trade in the morning, and then it crashed. But you see here let me show the screen, the full screen here. You see here on this side, $564. And this is, I bought 12.20, 12 o'clock, 12.25, $12, 12.10, 11.80, and sold at 12.85, 3.13, 3.69, even up to 14.25. I sold some shares here. So you see the potential if you have a plan. And these are just some, random examples and things I've recorded along the way. And the last one is just a true reversal of a stock here. You see here, this stock crashed quickly. Once I saw kind of like the first green candle here, it wasn't like, I didn't really have a support point much, but I saw I had the first green candle, kind of got in. And, once I'm in, if you see here, the indicators, if it dropped below this, I would get out. You see here, it spiked up. So small potential, bounce off of here, 10.20 here, and it spiked up to all the way to 11.22, then reverse back again. So this looks like quick little moves, but I mean, those are like $2+ that you can just get in and get out, quick, easy trades. And that's pretty much buying the dip. So that was just a few examples of how to buy the dip. We can go over many more lessons, but that's just to give you a general idea. So just keep those things in mind. Make sure you're in an uptrend. Make sure there's some volume, a quick crash, and it's bouncing off of support. All those things, and especially if there's a pattern too behind it, all those things are just going to strengthen your chances of having success when you buy the dip. So that was my video. Thank you for watching. Please subscribe, comment, and like, and see you on the next video.